All right, traders, here is your end of day recap for Monday, November 5th from the Tribeca Trade Group. So, a mixed day depending on what you looked at in terms of sectors today. Let me start with the not with the moving averages. Sorry, I'm looking at the 200-day moving average, which I'll talk about in a minute. But I'll start with S&P futures. They ended up pretty nicely, up 0.5% today. So, notice we were in the range of what we did on Friday. Remember, on Friday was this kind of reversal day. I'm not sure if I guess you can call it based on this candle, but we did start on the day's highs. We rallied, and then we basically gave it all back. That's going to look a bit different if you looked at SPY. But we'll bring up the SPY chart. That might be a little bit more, but still, an inside day. If you're using SPY, you can basically chalk it up to an inside day from Friday. But I think it's pretty good that we consolidate here. I think what's to watch here in S&P, and I know so many people look at the S&P charts. That's why I spent a little bit of time on it, because I know there's so many people who pay attention to this chart. But I would watch the 5-period exponential moving average. As long as we're still holding that, I would say it's constructive. You'll see if the bounce can be extended and see if we can get above the 200-day moving average. Qs are going to look. They also kind of had a well, not necessarily an inside day, but they were weak. They were the weakest area of the market in terms of the major indices, not in terms of sectors, but major indices, which I view Qs as one of them. They were pretty weak, but they did come back. They only finished down 25 basis points, and you have a bit of a hammer bar developed today. But so we'll see. Sometimes it's just one day where things can reverse. Tuesday and Wednesday have been good days of the week. Now, I know last week we had the first of the month where we saw some inflows and new money being put to work. I don't know if that's going to be the same thing this week. This week, of course, we have election day, and there's not a ton of. It doesn't seem like there's a ton of buying. It seems like more hedging than anything else going on with the option flow. Small bets. I'll go over today's option flow, but it was really lackluster, as it's been. It really hasn't been. I give option activity really positives when we see a lot of good trades, and there was some good trades. I made some money on things like BX and Honeywell from last week. I was able to take a target. I was trying to hit that second target today in Honeywell. I did not get filled. But, I'm going to talk about the defensive move, which we really haven't seen any option activity giving us some really good signals. It's, it hasn't given us anything, really. There's been a little bit of like after the fact Walmart calls that went up after the move. And sometimes option activity can be really late. So again, I'll talk about that in a minute. But really, we've been on to those moves for the last 2 weeks. I did an interview on Bloomberg a couple weeks ago where I'll repost that on my Twitter page. But I talked about this 2 weeks ago, value versus growth. Not last Wednesday, but the Wednesday before. And that worked out pretty well. So if you didn't get a chance to see that interview, you can go to ETF IQ on Bloomberg's website, and you could see the whole special on it. It was about a 5-minute piece, and I gave some ETFs, which I'll go over in a second. IWM was basically flat for the day, stopped right around the 20-day moving average. Again, a pretty decent range. If you're a really fast day trader, you could be pressing this to the downside, as well as playing the rebound today, because you certainly got some nice ranges in these. And I'm going to switch over to where there's strength in the market. So take a look at the Dow. I put this in the weekend newsletter. We really, by the way, put a lot of nice stuff in the weekend newsletter, which, again, sorry for the tap on the back. But some of the things that we've been pointing out in the weekend newsletter, I really haven't tried to make it too complicated. And it's been working well, but I had the Dow saying, hey, look at the Dow over the 200-day moving average, and it performed very well today, up 80 basis points or up almost 1%. So it's got the strength. So here's what I pointed out. I put, and you look at my Twitter page, I see a lot of people tweeting this stuff out today. But I've been talking about Pepsi, Coca-Cola, Walmart, Macy's, Costco, really value. And then I added a couple, charts. I had the diamonds chart from this weekend. PayPal, which I don't think did very much today, which PayPal and Visa I like to look at after a positive jobs report. But I think, the names that we've been going after, I'm very happy kind of staying that one step ahead of everybody else. But, here's what I see that's going on, which I think is pretty interesting. This is IWD versus IWF. I covered this in the midday session, which I have to think about what I want to do with those videos. I might make them just part of the premium content for Tribeca Trade Group members, because I do list trades in there as well, which I want to make sure that people are paying for that, because it is a premium service. But IWD versus IWF, this is large cap value versus large cap growth. And you can see what's going on here if you draw this out a little bit further. But basically in the short term, what you're seeing is really values start to outperform growth. And this hasn't gone on since basically 2015, 2016, where value outperformed, and then it was basically all growth in 2017. So these things can move. Part of the issue that I think, and again, I'm not being critical of anybody on Twitter, but I think it's just taking a lot of people a bit of an adjustment period, right? I mean, and it's tough because growth was such a big, especially small cap growth was such a big outperformer. It worked so well. But I think people have a hard time kind of picking up on what the new trend is. Now, I don't know how long the new trend is going to last. It could just be a couple weeks or a couple months, and things could change. But for now, I think it makes sense to have some positions here. I mean, look at what Coca-Cola has been doing. And we talked about Coca-Cola last week. I talked about it. I talked about how I wanted to see on the weekly chart Coca-Cola get over the value area, and it sure did. And it's out to a 52-week high. So what's nice about these things too, and it's funny because I see so many people they want to trade FANG, they want to trade some of the growth names, and the issue with that is and again, you could do that. They're liquid options, but they're also expensive options. You look at the Coca-Cola, you look at the Pepsi options. Like if you're an option trader, which I know a lot of you are, it's about half of the amount, the price. If you look at and compare the implied volatility, right? I mean, for example, Pepsi options. If you go out to let's go out to December. We're looking at an implied volatility of at-the-money options, we'll say 115. It's an 18. I mean, you look at Amazon, which I don't think Amazon reports. But if you look at December, it's about 36 for at-the-money December options. So yeah, so Pepsi's half as much price. So I don't know why people are not going crazy about this stuff. When it costs you half as much to get involved in Pepsi options than it does as it does to play in the Amazon options. And look at what Pepsi's doing. It made a 2.9% move. It's not like these things are moving like 30 basis points. All of a sudden, they are moving. I mean, it could be also that people are, if I were really to kind of think about it, and I don't know if this is right or not, but it could be that people are playing a little bit more defensive around the election. I don't know. But right now they've got the momentum, and you could swing these things if you want to in options to your heart's content. So that's a couple names. I've made mention about Walmart, which does have earnings this week, up 1.6% today. I traded Costco today, and I held on to just a little bit of the Costco options. I've been in and out of Costco. I was in call spreads. I got out of the call spreads for profits. I just bought outright calls today because it made it over the 50-day moving average, which I think is important. Oops, not MO, but Macy's is another one that's, I don't see very many people talking about Macy's either, but this was a chart that we pointed out last week on Twitter. And look at this. I mean, I just think these are a lot easier trades. Macy's might be a little bit different in terms, let's see what the November options are pricing. They're pretty expensive, believe it or not. But this is something that if you wanted to, you could just play in stock. That's something that I did a little bit with Square today. I bought Square close to the lows. It actually went a little bit lower. I got out for small profits in in Square. But again, that's really what I see is beneficial right now. And if you look at this, what I've been looking at is a lot of consumer staples. PG is another one that made 52-week highs. If you go over to J&J, J&J was also up nicely, up 1% today. So really, for as long as it lasts, this is what's been moving pretty nicely, and it doesn't take a lot to kind of realize it. I've been calling the three defensive sectors the just something catchy because it's just to try to make these things a little bit more exciting. But I've been calling the utilities, the consumer staples, and the REITs the three defensive amigos. It's horrible, but it's a horrible joke. But it just kind of gets you to kind of get maybe a little bit more excited about some of these areas, because I know regularly they're pretty dull areas. But hey, you can make money. You don't need to just sit in the names and cry in Apple and say, "Oh my God, this stinks. Apple's going down." Well, there's a bunch of other things that are going up. So, I know I hammered this point home last week, but I will say it again. Just looking at the S&P levels is not really going to get you too much. It's good to kind of look at the overall health of what the index is doing. But I'm a single stock and sector trader, so it'll be nice to see if this gets above and we've got all the sectors outperforming. But we don't need this. I don't need this to break to the new highs to make money. I think as long as we're staying in front of the curve, identifying which names have momentum to them, and I think we're doing an excellent job doing that. I didn't get a chance to talk about Nat Gas today. Nat Gas futures were up 8%, or I didn't mention it in the midday video. Nice MACD crossover. This is a great example of how a VPOC can work. This is usually a pretty big area of resistance. You could see that we took this out in oil, and it was basically good night. We took out this version point of control. We tried to go a little bit higher and basically failed. I think just for one day. We'll wait till this comes up on the screen. There it is. And then it basically died. And it's been moving down ever since. It was down another 70 basis points, it looks like, today. But Nat Gas, and this is how it works sometimes, is price will actually gap over this. So nice move there. There is a Nat Gas ETF with stocks in it. That's FCG. These things don't really look that great to me. COG is one name that I was watching, but I wasn't in it, and I watched it gap higher. It still ran a little bit. We had a couple people, I think, in the room play Hess today, right around the 200-day moving average. So it's kind of take your pick with some of these energy names. I am not really in any of them right now. I'm just kind of watching. Solar names, just a little bit something different. They were also strong today. Nice move all the way above the 50-day moving average today. And we did see some first solar calls earlier today. It didn't looks like they didn't really work. I did not take that trade because First Solar was already up about 3 or 4%. I think when we saw those calls trade, so it didn't make a lot of sense to me to kind of chase. A couple of healthcare names. I mentioned J&J earlier. NVS. I did take this trade. I actually structured a swap trade. There was some, I think it was December, 90 calls. I made this into a call spread. So I'm not going to go over the strikes because this is a free video, and to see my trades you have to be a subscriber. But I like the chart here in NBS. You kind of have to zoom out a little bit. You got a VPOC up here at 95 and one at 100. I'm shooting for this 95 VPOC. Notice what happened. I've got another example of a version point of control being taken out, and price went south thereafter. Another one that I think is interesting. I don't know if you can exhaustion gaps happen to the downside and to the upside and to the downside, I should say. Take a look at the volume in Kraft Heinz. Speaking of defensive moves in consumer staples, big move down. I took a shot at this today. I went long a couple calls. We'll see how it works out. Small swing trade. But I think with the volume and a big gap down after a big move down already, maybe set for a possible reversal. So that's something that I'm watching. I mentioned I would go over some of the option activity. I thought these deer were interesting. These were small trades, but again, I took Honeywell last week, and I thought that worked pretty well. Deere, I did not take this trade, but I thought it was interesting. I think Deere is actually a material name, but we also saw some industrial XLI call options, which I thought were interesting. Again, not a huge trade. Let's just take a step back here and look at the daily chart of XLI. Yeah, it kind of looks like a lot of other sectors that have gotten pretty beaten up. That's XLI. What else do we see today? There's a little bit of, I know some people they like to read into the data or read into when we see some activity. There is some trip calls that went up before booking, which I see bookings up nicely after the close. Looks like this UNP is a dupe. There was two-way flow in Apple today. A lot of puts in the beginning of the day. A little bit of calls as well. Citigroup, a little bit more calls in that one. For the most part, the growth names, then like Microsoft. Microsoft actually saw a lot more puts today being bought than calls, but I know people like to cherry pick the data when a name goes up or recovers. But I'm telling you, for these growth names, we're just not seeing a lot of big flow. Like, look at this ALGN name. It's 200 contracts. So, again, it's been pretty small, and they're not catching the momentum. I haven't seen a lot of buyers in these defensive names, and we're catching that on our own. So, I don't think that you always need option flow. Option flow helps for a number of reasons to kind of see, but I think we're really catching some of these moves just by paying attention to the price action. All right, guys, so that's it for today's video. Thanks for watching. Have a great night. See you tomorrow.